This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. Last day of the week. So, what do you guys say? TGIF, right?
It's going to be a long Friday, though.
Long Friday. We're coming to you from the CNBC TV18 Motilal Oswal studios. As always, I'm Prashant, with me, my colleague Sonia and Nigel. Guys, hi.
Hi, morning. By the way, today's that weekend, right? When you have the new releases. There's Oppenheimer that releases this weekend. Yeah. There's Barbie. So I agree that's a long working day, but post that is going to be a pretty good weekend.
Well, indeed, but it's going to be a hard working Friday, Sonia. You know, just
look ahead, Nigel. I mean, it's a state of mind.
Yeah, I just need to pull through the day.
By the way, our producer Anurag, I don't know if he wants me to reveal this, is I think going for some 12:30 in the night show, morning show, whatever it is, right? I mean, for Oppenheimer.
Yes. Even I've booked, tomorrow.
Tomorrow.
Yeah, so
it's going to be a big one.
I mean,
people are already saying it's just releasing and they're saying, well, it's one for the Oscars and stuff. I don't know.
but Nolan fans, right? I mean,
absolutely. Yeah. I'm one. So
am I. Totally.
I plan to watch it. Well, we got lots lined up, right? Earnings which came through after market hours yesterday. A lot of earnings which will come through today. So let's tell you what you need to know. Infosys is the first thing that I want to quickly mention before I get to global stuff. I think Infi may, in a way, prevent the Nifty from hitting that 20K mark, at least at open. I mean, if it had not been for Infosys, I think we would have run it this morning. Yesterday, at the day's high, we were just 8 points short. Just 8 points short to that 20,000 level. And it would have been, I mean, it still would be, I think, the fastest 1,000-point rally from 19,000 to 20,000. We'll see. But it's disappointing. The numbers are disappointing. ADR was down 8.5% last night. The stock has got about a 6% weight. The weight's come off quite a bit, by the way, over the years, but still got about 6% weight. But the bigger risk is that the market kind of starts to turn its back on other IT stocks as well, at least tier one, right? Because numbers from pretty much all large top IT companies and the outlook from all of them has been underwhelming, has been poor. But but markets and stock reaction has looked through that. Just look at what happened last week. Look at what's happened this week as well. Stocks have been resilient, maybe a little lower recently. But will Infosys change that, right? With a shocker in terms of the downgrade to its growth guidance for FY24. We'll discuss more on this a little later. To add to the pressure on IT stocks, US 10-year yield surged last night. They were up about 10 basis points. And they were at about 3.85%. That's a big one. We've not seen a 10 basis point jump in a while. The dollar index is creeping up a little bit as well. And that's just about 101, almost 101 now from 99-ish point something kind of levels. So last 2 days, it's moved up. But the dollar is moving up because data is coming in stronger. So we had that inflation surprise on the downside, which markets loved. But the initial jobless claims, they were lower than expected, which is good news. And home prices, I mean, the home sales data itself was a little underwhelming, but the prices component was stronger than expected. And that's the reason why the dollar rose. The markets were a little off. I mean, you got the S&P, which was down about 0.68%. The NASDAQ on your screen was down a full 2%. There were big stocks, right? Tesla, Netflix, etc., which we were discussing yesterday. They had the maximum pressure. Those stocks lost between 8 and 10%. The Dow was up about 0.5% or so. So the picture is a little mixed as we start this morning, not just because of the Infi numbers last evening, but also the fact that overnight, I mean, it's not an up market that you're looking at. It's a down market. But you had to put this in context. I mean, I think the S&P has not had more than a 1% fall in almost 40 days. So you got a 0.68% fall. So nothing to freak out about. The NASDAQ fall perhaps is a little larger, but those are outsized cuts coming in from those names that I said. All right, so what are we looking at? The upside is open. I mean, and it's been a strong market where the dips are getting bought, and there are those dips which have come through this week. Supports, let's look at that. The first support comes in at the 19,715 level. I mean, it's an hourly exponential moving average, but even this is so far out. We are almost at 20,000, but that's, the first number which you can look at as a support. Bank Nifty closed above the 45,905 level, the level we've been indicating. It basically shows that the move is extending. It was a strong day there. The upper Bollinger Band for the Nifty band stands now at 46,650. So, keep an eye. That's just about, I think, 500, 600 points away. And on the way down, the low of 45,281 should not be broken. So, just some numbers to work with as we start another session. But I reckon a lot of the conversation would be around IT and what it would do and mean for the market.
Oh, absolutely. And what are the odds, right? I mean, when you're just 20 points away from that milestone, boom, comes this negative Q to sort of spoil the party completely. So today, perhaps that's something that will happen. The big question in everyone's mind, you're asking that question, I'm asking the same thing. Will Infi really derail the market up move? On Infi particularly, of course, we all know that there was that sharp cut to the FY24 growth outlook. But the management saying that there is softening of discretionary demand is a big thing. Does it restrict itself only to Infosys? Is it a company-specific issue? Is it extended to the entire sector? That's the big question that we need to ask ourselves. They also talk about how deal start dates are getting delayed. So, if that is the case for the entire sector, then one needs to rethink what's happening, with the sector, because many of these stocks have rallied quite a bit. So that's on Infosys. A lot of downgrades come in. In fact, Macquarie has downgraded Infi to an underperform. They have a target price of 1130, which is a big downside to the current market price. Many such brokerage views. We'll come to that later. Apart from that, HUL also disappointed. So there's nothing to latch on to, this morning in terms of positive cues. HUL barely 3% volume growth. There as well, the management commentary was not inspiring at all, saying that competitive intensity is rising. So these two could sort of hurt the market sentiment today. Now, if you talk about the global markets, there too, if you look at the Nasdaq's performance, right, the Nasdaq was down 2%. Netflix, Tesla disappointed in their numbers. So that seems to be the theme both globally and locally, and that could take the markets lower. The only silver lining is that foreign investors continue to pump in money thick and fast. So yesterday, once again, there was almost 3,400 crores of buying. And today you have Reliance that comes out with numbers in the evening. It's expected to be a muted showing, so that may not provide too much support to the market either. And tomorrow you have ICICI Bank's numbers. So could that be the solace for the market? Could that be the balm sort of for the wound? We'll get to know, because the run-up has been pretty sharp for ICICI Bank. The stock is up almost 13-14% from the lows in March. And, the market itself is up 20% since March. So would be interesting to see if there is a dip, do the dips get bought? Because so far, buying the dips has worked out very, very well. So, ex of Infosys, will the dips get bought? Time will tell. But for now, today could be a bit of a tricky day.
Well, that's right. But we are waiting for 20,000, right? 20,000 got hit. Not on the Nifty, not even on the near-term contract. The Nifty futures, the August contract. Because yesterday, the Nifty futures, the near-term contract went into a discount actually towards the end of the trading session. So there was some shorting at the top. And Infosys will serve as the reason for the market to pull back. We're looking for some reason. Infosys is that reason. And don't mistake HCL Tech's reaction with Infosys. For HCL Tech, the market was positioned for a weak set of numbers. And that's why we did see a bit of a bounce. This has come out of nowhere. Infosys has rallied from the recent low. So Infosys is going to be the sow point in today's trading session. It's going to be a test for the bulls today. 35% of the Nifty will be reacting to earnings itself. That's two of them yesterday, Infosys and HUL. Today you have Reliance, JSW Steel, HDFC Life as well as Ultratech. And tomorrow ICICI Bank and Kotak Mahindra Bank. So between all of them, 8 stocks close to 35% of the index will be reacting to numbers itself, or will be bracing for numbers that we're getting post-market or over the weekend. IT stocks, well, they account for close to 14% on the Nifty, and they could pull back a little bit. Remember, out of that 14%, you have 10% that's between TCS and Infosys itself. And the FI long position, I've been mentioning this, it's moved to the highest ever that we've seen. That's a net long position, longs minus shorts. Who could bat for the bulls then? The Nifty Bank, well, that's been in excellent form. So can the Nifty Bank put its hand up? Remember, it constitutes around 20-29% of the Nifty as of now. And L&T, they have announced that crucial buyback. Market want to know what they're going to do with their cash. And can they take the ROE to around 18%? So that will hold in good set. So 31% of the market, you have to bank on them batting for the bulls today. What do the FIs do in the F&O market? Well, yesterday they added long positions. Close to around 3 long positions for every 1 short position. And the long positioning goes to around 71%. You'll say, what's to worry? We have seen 80-90% both on the long and the short side. The problem is that when the net long position goes above 1 lakh, we've traditionally seen a bit of a pullback. And now the long positioning is at around 1.04 lakh contracts. On November 30th, it went to 1.02. And from there, we did pull back a few hundred points, actually. I'm not saying that's going to happen this time around, but that's normally a word of caution when the net long positioning moves over 1 lakh contracts. 2 big strikes in the most active, and the highest open interest are at 19,800 put and the 20,000 call. So just plugging in the numbers then, Given that the 19,800 puts, some smart money would be writing that. You're counting on that 19,750, the first support zone for the bulls. And the bulls will look to buy the dip. But will that bounce last? That's going to be important because till now buying the dip has worked out. Crucial that the Nifty though holds on to the 19,750 mark. Till that happens, you'll see yes, the uptrend is still intact. And we're talking about the Nifty, we're talking about the IT stocks, but I think the bigger test will come from the small and the mid cap space because that's where the bulk of the money has been made. So that will be the bigger test today. Can the mid cap and the small cap indices continue to outperform, continue to hold when up, or at least don't see a big gash in today's trading session? For starters, though, the Nifty suggesting a 90-point downtick. Let's see how it goes. Infosys going to be the sore thumb, and buy on dip thesis is going to be tested.
Okay, well, lots to watch out for today. There are big numbers, even in the broader markets, that will be reacting to, their earnings that came in post-market hours. So we have our hands full. Without wasting any time, let's kickstart the show. First up, Pramod, the Amte of Incred Capital, says the sharp run-up in the Nifty is impressive, but a big beat by mid and small cap indices is an area of concern. He raises their Nifty target to 21,103 from 20,330 earlier for recent consensus EPS upgrades and roll forward. He retains their overweight stance as forward PE valuations is comfortable near the 10-year mean and India's forward PE valuation premium is at a 7-year mean level. But he adds there are some downside risks such as uneven rainfall distribution, fuel inflation and IT sector hiring slowdown hitting urban consumption.
Okay, well, let's get you some money market views now. This is Lakshmanan V of Federal Bank who says that the dollar index is languishing around the 15-month low and in absence of any fresh trigger, the dollar INR is trading sideways with very low volatility. He says the focus now shifts to an action-packed week ahead where the Fed, ECB and the Bank of Japan are slated to meet for their respective monetary policies. Yesterday, he adds, the People's Bank of China held its benchmark lending rate steady, indicating that they wanted to keep the yuan slide in check, which further helped the rupee. He expects the rupee to trade between 81.68 to 82.28 to a dollar till the FOMC meeting.
And on the bonds, Lakshmanan says the 10-year benchmark bond yield consolidated in the 7.02 to 7.12% zone and is expected to continue in the same band. He says the FOMC meet will be keenly watched before we see any kind of directional move.
Well, we have a lot of stock-specific action that we'll be tracking for you, and we'll get to that in just a bit from now in our special Top 10 segment. But let's run you through the list for now. We're looking at L&T, United Spirits, Thunderla Platforms, India Mart, Union Bank. They are all the stocks on the back of positive news flow. While on the flip side, you have some large names that will be reacting to negative news flow. Infosys, HUL, Dalmia Bharat, Persistent Systems, and Emphasis.